Today I want to show you how to trade the RSI. 3 ways I use myself, like 3 things that pro traders do when they trade the RSI. So these are not strategies you'll see everywhere online. These are things that I've done myself in the past, things that I know about the RSI that work. And they're kind of like the opposite of what most people will use in the market. So I think it's going to be pretty cool. Let's dive right in. Actually, it's an absolute mess here in my apartment in Bangkok because I'm moving tomorrow. So I've started to pack some stuff. It's annoying. So let me do the video for now and let's dive right in. Today I want to show you some 3 ways to trade the RSI that most traders don't use, don't think about. So we'll kind of show the rules because there's so many misinformation on YouTube about how to trade the RSI. Look at when it's overbought, when it's oversold, but it's a lot more than just that. So I want to show you 3 ways, and the 3 ways, we'll just go to theory first, then we'll go to the actual market, show you some examples of how that would work out. But let's go with the theory first because we need to understand like the basics behind it and the principles. The first thing you should never do when you trade the RSI, never use it in trending markets. Now, when the market is trending, you see price makes higher high, higher lows. We'll see this very easily on the chart. We cannot trade the RSI. It's very simple. Most people will try to still pick the top. They want to be in the market. They want to catch the top of the trend, but it's actually a bad way to do it. Usually when you do this, you're going to get stopped out a lot and you might just kind of lose money over time. So the RSI works only well in sideways market. We can trade breakouts and we can trade reversals of the sideways market, but we cannot trade reversals or try to pick tops when the market is trending. Okay, that's a bad idea. Now, what happens the opposite if you want to use the RSI to buy with the trend? Well, usually the RSI will be oversold only if it's a very big pullback. So it means that the trend might stop. So you don't want to just buy when the RSI is overbought if it's in the trend. For example, if you have price going like this, up and up and up. Again, theory, we'll go into some examples in the chart after, so you'll see exactly what that works out. You don't want to wait for the RSI here to be overbought to buy, because that might be a crash like this over here. And that's kind of what we see here. So you don't want to necessarily buy with the trend because that's usually a bad way to do it. When the RSI is overbought, oversold, it's an extreme point and it should not be used in trends. Okay, pretty simple. Don't do that. Now we come to trading reversals. Well, you can trade the reversals with the RSI, just not the same way most people do it. So like the common knowledge is, oh, when it's oversold, just sell. When it's overbought, just buy. Wrong way to do it. So what you want to do is only trade when it's back in the limits. Now, what this means, actually, if it's going to be the RSI being, this is the RSI, by the way, a very beautiful drawing. If the RSI is going to be here overbought, you don't want to buy here. You want to wait for the RSI to become back in the limit to then buy here. Okay, that's the right place to buy. This is the wrong place to buy when it's still outside the limit. Same thing if you have your RSI like this and then the RSI goes here, then it's oversold. You don't want to just sell here. You want to wait for price to come back within the range, the normal limits, the 70 and 30, to sell in this case, for example. And that's only if you trade reversals. Okay, let me just get to here the third one because that's kind of similar to it. We can trade the breakout against the RSI. Now, that one is pretty cool because it's like what most people will never think of doing. They'll be afraid to just buy when it's overbought. They will be afraid to sell when it's oversold, but it actually works quite well. So same principle. We don't need to wait for the RSI to go back within the limit. We need to have a clear range in the market. Then we need to have a clear breakout of the range. And we need to have the RSI when that happens to be overbought. So within the trend. So we go against the RSI. Against what most people will say when it's overbought, you got to sell. We go against that. We buy when it's overbought. We sell when it's oversold. So this is what we can do also. This works quite well. Now, you'll see here the difference is here, sure, here we could buy if we're going to have a breakout, but we'll buy when price is outside the RSI, so outside the limit. And then we'll only sell, so go back like mean revert, trade reversals, if it's going back within the range in this case. Okay, so that's kind of like the play here. So if you want to trade against the RSI, when it's overbought, you want to buy. Then you can do when it's outside the range of the RSI, outside the limit. So for example, over here, outside the limit, you can buy if you trade the breakout. But if you trade the range and you trade the reversal, then what you got to do is you got to wait for price to go outside and then come back when in the RSI, then you can sell in this case. Okay, so you get it? So it's kind of like a different way to see it. But this works very well. These are things you can use now that will make a big difference in how you trade and the overall results. Let me just get on the charts, show you some examples of how that looks like. So what I've taken here is a very simple example on the S&P. I'm going to use only the 1 hour chart for this video today because it's easier to find a lot of setup here. You can see more things there, but you can use this on any kind of time frame you like. And we already discussed the fact that you don't want to be selling this on trending markets. And we have a good example here on this chart. It's going to be plenty of examples like this over time. So have a look at this market here. So we kind of have a bit of sideways market here. So price moving like in a kind of range, but it's starting slowly but surely to trend. See how here we get out of the range, then we make these highs, then we come back, we touch here a little bit, then we make some highs again. A lot of people would say, well, this is overbought because the RSI here is overbought. I'm going to then sell. But then look at how this is not going to work in the trend. Okay, see how price here comes next, moves around. Sure, the RSI is coming back to like being normal now within the limit again. So you can say, yeah, it's coming back within the limit. That's fine. It kind of slightly turns into a range. You'll see price here go up and up. And then as soon as price starts to trend, you'll notice that the RSI is going to be overbought a lot because we're trending to the upside. So the RSI will be overbought quite many times here. We had an example over here. The RSI came back down, but here, like, this is just a small pullback. So we stepped out here at least once. Then look at how after this, it's going to happen again. Okay, here we kind of are, you could say overbought. Here we are overbought again. Now, sure, like, there's going to be a time when you're going to be right in this, but you're going to have a lot of losses, go through many, many losses to then get out of the trade. So see how this period here, from this time right here to this time right here, where we're overbought on the RSI. Of course, we could like sell here, but like look at price will take a while and almost hit a stop loss here. So it's going back to sideways. So that's not the place where you want to trade the RSI. You would actually be much better waiting for a sideways market to start trading because this is not the right place to do it. So here you notice after a while, we get into a sideways market. Now that's pretty cool because the fact that see how we have a very clear range. Okay, so I'm just going to put some zones here to kind of see how we would look at it. So we have a support over here. This line right there is our support. I'm drawing it from the lowest point here. This is the lowest point of the range right here. Then we have a resistance that's, let's just say to be fair, somewhere around here. Okay, so this is not so clear, but at least we have a clear support here in this market. Now that's where we want to start to see for two things. To get the two things we talked about so far is we can sell when it's going to be overbought and like look at price coming back within the range and the RSI being back within the limit. Or we can actually trade the breakout. So doing the opposite, waiting for the RSI to be overbought and buy or oversold and sell with the breakout. Now notice how here we have a clear breakout. Okay, that's a big breakout of the range. According to what we see on the chart, we can then decide what to trade and what kind of setup we should be in here. So then we have a nice bearish candlestick breaking outside of the range over here. And then you see that if you look at the RSI here below, the RSI is clearly oversold on that breakout. So what that tells me here is that price is going to probably continue lower. We have a nice breakout, a very big size candlestick, clear breakout of the range. So it's not like something you have to guess and it's not something you're not sure about. It's a clear breakout. So we will enter here below the low. Of course, we can have a small pause. That's fine too. And this probably happened just before the London session, exactly. So at 7 a.m. or so. That might be why it's low for now, but it's going to pick up very soon after. Let's just move this forward a little bit. Okay, so we will be triggered here on our trade. Now we trade the breakout. By the way, I've done a full video here on YouTube where I'll show you this breakout strategy in detail, like the step-by-step. I'll put this link in the corner over here so you can check it out if you want. But this is just a quick overview here of how we do it on this example. But we'll enter our trade here. We'll go short here. We can place a stop loss here beyond the high. And usually what we do is we take this two thing here, the range size, and we'll add it to the bottom. Okay, so whatever range it is, we'll just add this double at the bottom. And that's going to be our target in this example. So I'm just going to very roughly draw this here from there to, let's say, here. And that will be here our target on this trade. So we have a pretty good reward to risk. I have maybe like a 1.5 to 1. Sure, you could do it like way longer because your price in this example went back a lot lower. So if you want to kind of take some partial profit, trail your stop loss, like there's a long way here you can go. But that's a clear example of how the RSI can work to trade these breakouts. Okay, so we are able to catch in the move. And we have a much better edge trading in this condition over here than we had in the past in this condition if you're going to sell at the top. Okay, we have a much clearer range, this example, and that's much better. So let's see how we can do the same thing for reversals. Again, that's a breakout example, but let's just pick a random pair. USD CHF, I don't trade this pair so much, but I'm sure we can do the same thing here in this example. Now, what you don't want to do again, like on anything we talked about before, is trading with the trend. So look at here, we have a nice uptrend. Sure, that looks cool. But look at here, our side being overbought. Okay, overbought. Now, we don't want to, sure, we could like make a small profit here, but it's very hard to pick the top because price could go a bit beyond that. Sure, it goes beyond that after. Okay, so we don't have a clear edge here. Alright, so I was trying to find an example here that was big enough on the range. I know we have a lot of tight range in this pair. It's not a pair that's moving too much in one direction, so it's not very good for that. But let's have a look at this example here. So we need to have a clear range, like we said. So we have our support here. You'll see price comes back to our support a few times, and that makes it a good environment to look for reversal trades. So we'll see price here hits our resistance. Let's just try this here. That's our resistance, roughly. And price comes back here and touch our support again. So we touch it over here. Okay, so we're still within the range when price touches here. And then we go back to here. So we're kind of like going back to our same level here. Okay, this is pretty much the same area here. So now look at how the RSI is oversold here. Okay, at the bottom of this range, and make this here a little bit bigger so you can see. Okay, we're clearly oversold, but we want to, because we trade here reversals, we need to wait for price to go back within the range. So we are not going to do it right here when we hit the low necessarily, because the RSI here will be oversold. We want to wait for price to just go back inside. Here we go back inside, so we could do this here, but we kind of go back outside. Let's just see, to be conservative, to be fair, we are going to buy here. At the second time, it goes back inside. Okay, just to kind of give us a slightly worse entry here. And you can see also come out pretty much ahead here. Okay, so when price comes back within the RSI is roughly around here. Okay, so we are coming back. We are going up a little bit. Now, we need to have, for this, some kind of buffer, because we don't want to just put a stop loss straight agnostic, because that gives us enough room for the trade to go. What you want to do is you want to usually look for the lowest low before in the market, and you want to put your stop loss a bit beyond that to be safe. So what we do in this example is we look at our previous low, or actually our most recent low, which will be this one over here. So in the past, let me just get this here. This here will be our most recent low. And you see this low was a bit lower than this one. So we'll put maybe a stop loss here, beyond the low. So we know if price goes down here, the range is probably not working anymore, or it's less likely to work out at least. As soon as the RSI is going to be over 30, so beyond the limit, we'll be able to get into a trade right away. So I'm just going to give us a bad entry here. I'm going to put it here at the top of this move right here. Enter stop loss. We'll look at placing it just here. Okay, just beyond the range. Cool. Beyond the most recent low before. That was, like I said, over here. Okay, so that's kind of what we have so far. Now, how do we take profit in this? Well, it's very simple. We look for the top of the range and give us some buffer there. So we'll look at placing this thing over here. And let's say we put it like 80% to the top. So we go 80%, we go 80% roughly. That's around here. Even without seeing the future price action, you can say, well, this is the top. Okay, we went, have a look in the past. We went here before, then we went here, then we went here. We went a bit beyond that. But let's just say we give ourselves like a 20% buffer, which will be around this here, to take our profits. So we are sure or almost sure we'll hit it. Okay, unless something happened. But then we can like trail a stop loss. We can move different things around. We can take some break even to be able to achieve that. Okay, so here that went pretty well. That's a big R2S, by the way. That's a 3.5 to 1. This is really big. Okay, now keep in mind that this, you're going to be stopped out more often because you don't have a clear place in the chart to put your stop loss. It's a little bit more based on the past lows, and price could still like have some wicks. So you might be stopped out more often, but taking 3.5 to 1 for these stopped out so often is quite fun. It's actually pretty good. Okay, so we're able to have a big move on this, which is quite nice. Okay, let's look at a different example on how that would work out. Let's take a different pair. Let's go random again. Okay, you're usually the worst pair ever. Let's go with that. That's fine. I have an example over here. Perfect example. Actually, we'll see if it's a good one or not. But look at how price here is in a sideways market. Okay, we have a low over here. By the way, USD is sideways a lot. It's just not performing very well, but that's our range so far. Okay. Now let me just move this forward a little bit, see how price evolves. Okay, we're still in the range. Okay, we're kind of breaking out here. Let's see what our RSI is doing in this market. You see our RSI here is overstalled, so we are below the low here. But we don't have a very clear range yet. Okay, it's very not so clear. So look, when I say clear range, what I'm meaning is we need to have a clear candlestick breaking out. Now look at her low in the past. We need to have this break of this low here. This is our most recent wick, most recent low. We need to have a break of this one very clear with a actual body candlestick. We cannot just break with a wick. That doesn't count as a break for me. So we have here, we have some wicks. Now, as soon as we have a new wick that's lower, this becomes our low to break for the range. So this is our new low. Now, if you just look at here, this candlestick here doesn't really break with the body or new low. This one here doesn't break it either. This one here, no. And now our new low to break is this lower candlestick that is over here. So that's going to be our new low to break. So we're not going to break it. We're going to actually go back within the range, actually close to it. Now that's when I would be kind of looking to, I know we're not going to break out, we're going to go back in the range because we always have some wicks, and your USD is very good for this kind of behavior, which is quite annoying, but it's fun. Now look at how our RSI went from being oversold right here to now it's actually back within the limit, back within the range. And we know we're not going to break out because we're going back with these always wick to go back within the range. As soon as we see this, okay, this is a place where I would be comfortable taking a buy trade. Now we need to have a place for a stop loss that's going to be beyond the most recent low. Okay, so we have this low over here. That's our most or lowest one because we have one over here. That's lower. Let's just go see if you go in the past, see if you can find something else. Actually, we have this one here. Let me just see if this is better or not. Okay, this would be your low. That's actually a little bit the same. It's actually higher. So what we'll do is we'll just, take this example. We'll just put our stop loss beyond this wick over here. So our stop loss might be, let's say, here to be fair. So beyond the low that was over here, a little bit above. All right. How do we take profit on this? What summer was before? Okay, we'll do the same thing as we did last time. Here we go long around this price. I'm giving you like a slightly worse price here. We could get in a little bit earlier, but I want to show that that's still possible even if you have like a bad entry. It's still fine to do this anyway. Okay, stop loss over here, a little bit below the wick. Then take profit will be 80% roughly of the range. So see how, I don't want to look at the future because that's kind of confusing, but let's go with this. I'm seeing here, this will be, for example, this is 100%. This helped me to kind of figure out my take profit. So this, let's say this will be 80% around here because we've been many times over here. This will be our take profit now. So let's just take this out and move our thing over here. Cool. All right. Nice. Okay, this will be our take profit here. Pretty good. So let's see how this turns out. Okay, price actually step us out right there after. Okay, not very cool. Not very cool. But like I said, that stuff happens a lot. Now we have a couple more examples here on your USD. Actually, this is pretty cool. So I'll show you a few more examples so that you can kind of get better and have a better idea of how we do this correctly. So let me just kind of draw a quick range here. Like you see, we have a low that's over here. Okay, we have a high that's somewhat over here. Okay, fine over here. We're not kind of yet in the big range, like very clear yet, but it's still pretty good. Okay, see how now price, okay, goes back near the low. Now here the trend is clearly broken. So we had these kind of pullback that are now broken. Price comes back to a low, a clear low we had before, which is this one over here. Now look at how here we wouldn't retrade this because we still have a low that's here, that's more clear. Okay, this is really a low in this market. This one here, we didn't break the RSI. This one here, we kind of broke the RSI, but came back within, but we're still far from our low. So we'll just step away from that. Now here is where price breaks the RSI again. So look at how this is happening here. Okay, break over the RSI. Now we go back within the range somewhere around here. This one we said is, again, not very much at the lower range, but then price continues and kind of breaks it a few more times, including here, which is a lot lower. So this is pretty good. Now I just want to make a clear note here. Sure, you could take this here, this breakout of the RSI coming back within. You could take this for sure, but make sure you put your stop loss below this low over here. Okay, because that's where we'll put your stop loss. So it's a slightly worse entry. You can still do it. You will still be fine, but just keep in mind that you want to put your stop loss beyond the most recent low. And if you have a low before that, you need to put your stop loss before that. Okay, keep that in mind. It's very important. Now here, price goes lower in your range. And then we have this RSI again being oversold, coming back within. So here we come back within at this particular example here. So we come back within around here. And just see we would enter in this market here because we know we're going to be in the range again. We might reverse. And then we will put a stop loss a little bit below this low here. So we'll just take our tool. I'm just going to give you again a worse entry than you could have. So over here at the top of this move right there. Then I'll move our stop loss at the low we had before to the lowest, most recent low. So it was here. Gonna make it some buffer. I'm going to put it here. We have a wick here before. I'm seeing we have this wick. So this is a wick we want to be careful about around here because it could be impacting our trade still. So I'm just going to be careful, to be very safe. Going to drag this here a little bit beyond the wick. Okay. So now I think we're pretty much good to go. Cool. Like this. And then take profit will be 80% of the range. Again, this will be probably around here. We have a 2.3 R, which is pretty good still. Sure, like we could do, this is 100%. This would be like 80 or so. Okay, so we're triggered here at the next move right there and see how price here continues sideways. But at least we've been able to reach the top of a range. That's pretty good. This is almost 3 to 1. Even if you were to put a little bit less than that, okay, 2.5 is still pretty good. 2.3 would still be fine. Okay, this is all right. So it depends how you put it, but this will be a pretty good take profit here in this example. So hope that makes sense. Hope you see how we can trade here the RSI. Let me know in the thoughts and comment section as always. I want to hear what you think. Will you trade these strategies or not? How you're using these tips or not? I want to know. Look at my video on the RSI to trade it like step by step with the breakout strategy also. I have a video link below for that. Make sure you're subscribed if it's not done yet. I publish like this 3 videos every week. 1 to 2 videos like this during the week where I teach you cool tips and tricks for trading. And I'll catch you back here in the next video pretty soon. Ciao.